Welcome to the Silent Trading channel on Sunday the 22nd of March. Today I'll be analyzing the chart to see whether the next week's chart will go on a bearish side or a bullish side, right? But before I start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. First thing first, I'm going to be starting on the week's chart. As you can see, the week's chart has shown us that the latest weekly candle has already pushed down all the way down and has broken a few support, right? How many support has the weekly candle broken? The weekly candle has broken. First support is a 5,000 support. The second is a 4,900, 4,800, 4,700, 4,600, 4,500, right? But not 4,400 yet, right? And where is the more support that the weekly candle has already broken? The first candle is over here, right? But actually it is not being broken because the open price is the same as this support over here, which means the weak candle has broken one support over here, 2, 3, right? Which means other than the psychological support, right, which is the 4,900, 800, 600, 700 and 500 are being broken. There are weekly support being broken over here. This is a reversal support, right? A key level support. This is also a key level support because the candle closed with a full body candle, right? Full candle body, right? Which means the week has already broken multiple support, which means also that the price has a chance of going down more than going up, correct? But the problem is, since every candle has to form both a top and a bottom week, we need to be able to see where is the direction that the next week candle is going to form a week first, and we need to enter a trade based on the direction that it is pulling back, right? So if the next week candle is start pushing up first, right? If the next week candle start pushing up first, you're gonna be waiting for this push up, right? To create a high week, to produce a high week while not touching what? Not touching resistance, because touching resistance means triggering sell limits, means triggering resistance, means triggering orders at resistance. So we wouldn't want the chart, we wouldn't want the next week's candle to push up all the way to attack resistance. Correct? So what we need to do is we wait for the chart or weekly candle to push up and then start forming a what? Start forming a high wick and then start pulling back. And the next candle pull back, it is to pull back and then to pull back all the way down to create a bottom wick. Correct? Which means the weekly candle's wick has to be created first from the up and then start pulling back and then pushing down. Correct? If it is going down further, but if it is starting to go up, the next week candle would have to push down to create a bottom wick first and then pull back and then start pushing up, which means we only have a chance of entering a position from the next week's candle, the next week forming, to see whether we are going to get a very good, right? A very good order, a very good position from this spot over here, because the only position that we're going to be getting is either a short or a long position or a sell or buy position. Because why? If the week is going to create a bottom wick first, right? If the next week candle is going to create a bottom wick first, we wait for the bottom wick to be formed, right? And after the bottom wick is formed and the weekly candle start pulling back, correct? And if the weekly candle start pulling back and we see on the 4-hour candle, 4-hour time frame, the 4 hours chart, that the 4-hour candle has started forming a bullish price action, then if that bullish price action is complete and becomes a valid bullish price action, we are gonna buy at the next retracement, right? So for the next week, we wait for the week candle to push down, create a wick, and then we see on a 4-hour chart and wait for the bullish price action to create, right, to be formed and complete before we start buying, right? And if the weak candle start pulling back and then start pushing up, we're gonna be able to have a, I'll say a profitable position, and it is an exorbitant position. Because why? Because the distance between weekly candles top and bottom wick is a few thousand pips, right? A few 10,000 pips, which means if you're able to grab the best possible position in this spot over here, you're gonna be profitable, and that profit from that only one position over around here will be able to cover your whole week's profit, right? So we wait for either the weak candle to create a bottom wick and then start reversing on the 4-hour chart. Then we start buying at the 4-hour chart, right? And wait for the price to break of structure, do a direct break of structure continuously. Or we either wait for the weak candle to push up, right? Push up. Once a top wick candle is formed, a top candle wick is formed, and on the 4-hour chart it start reversing, right? It start producing a sell side price action, a bearish price action. It is where we're gonna start selling once the 4-hour chart, 4-hour candle retrace, right? So this is where we're gonna be entering a trade. We either enter a trade, a buy position over here, buy order after H4 produce bullish price action, right? So this is a spot that we're gonna buy if the 4-hour candle start producing a bullish price action, alright? And where is the spot that we're gonna sell? We're gonna sell at around this wick over here, right? Sell order after H4 produce bearish price action, which means we have got the best possible spot to enter a position right now, but not the best spot right yet. We need to wait until a bullish or a bearish price action is produced, either on the 4-hour time frame, right? Either on the 4-hour chart, right? Over here, both over here and over here. If on the 4-hour chart the price push up and create a bearish price action over here, we can start selling. And if the 4-hour chart push down and create a bullish price action over here, we can then start buying at the next retracement, right? Because why? Because we need to be able to understand the chart. The lower time frame doesn't always move parallel to higher time frame, because sometimes the trend on the lower time frame is just a higher time frame's week producing, right? Sometimes a higher time frame's push up is just to create a top wick before pulling back and then pushing down. While on the 4-hour time frame, it is a trend up all the way until the weekly candle has stopped producing wick and then start pulling back. Which means we always need to understand that for the price to move in confluence with each other in both lower and higher time frame, we need to understand that a trend in the lower time frame may only mean a week in its higher time frame, correct? Likewise, if the weekly candle, right? If the weekly candle is just create a top wick, right? So if the weekly candle is just creating a top wick over here, right? And then start pulling back, leaving very little candle body, right? But on the 4-hour time frame, a bearish price action may be produced over here, right? A bearish price action may be produced over here. While on the weekly time frame, it is just a wick creating. But on the 4-hour time frame, it is a bearish price action. correct? Over here, right? And sometimes a little bullish candle to trick people into buying, and then another next bearish candle pushing down, right? So to be able to understand all of this, we need to understand that price action could always be created in against the bigger trend, but it is only created just for the higher trend to create a wick before the lower time frame start reversing once more, right? So if this is a weak candle may only push up just to create a wick before pulling back, but a 4-hour candle is pushing up, right, from its initial trend, right, initial bullish trend can push all the way up, and then once the weekly candle start pulling back, the 4-hour candle will start producing a bearish price action and then start pushing down once more. So to be able to enter a trade based on real price action, you need to be able to understand that price must always move in confluence with each other in multiple time frames before you can get the best possible spot to enter a position, right? So likewise, a weekly time frame's wick may only be a trend in a 4-hour candle. So if a 4 hours candle over here, we're gonna be buying, right? We're gonna be buying at this spot over here. We're gonna wait at least for the 4-hour candle to either push down and then create a bullish price action. The next candle retracement is where we're gonna buy, and then wait for the price to break its structure continuously. And after it has break enough structure and push up enough and then start reversing, it is where we're gonna be closing our buy position over here, and then we are gonna start selling, right? Because if the wick has pushed up enough to form a top wick and then start pulling back, the 4-hour candle will start reversing, which means a bearish price action is going to be formed on the 4-hour chart. So once a bearish price action is formed, the next candle retracement is where we're gonna sell, right? That is the real position spot if you're gonna be entering a trade. And to enter a trade, we need to understand every single time frame's trend, every single time frame's price action and bar action, correct? So on a 4-hour candle, I'll be revising with you guys on tomorrow's chart whether we're going to be entering a trade either on a bullish side or a bearish side, because we'll be watching tomorrow's price action first before we enter a trade, and then wait for the market to be open on the America side, right? So for today, this is all I'm going to be analyzing for you guys. So I look forward to seeing you guys tomorrow, and I look forward to be analyzing for you guys every single day. So I'll see you guys tomorrow. So for today, that's all I'm going to be saying. See ya.